Good afternoon, everyone. This is Henry with Simpler Trading, and in tonight's free video I wanted to show you how I'd come up with a trade idea and see if it gives us an opportunity here over the course of the next week or 10 days. But it begins by having had the opportunity to go to the Cyber Rodeo that Tesla held last week. So a really cool event, and something that as I was browsing through the factory, I had come across just this little inverter pack, and I thought, I'm going to take a picture of this just as a reminder, because, building the largest facility on Earth and then making note of some of the products that go into it, I was like, oh yeah, this is going to be helpful as I'm going through some of my watch lists later. So Honeywell comes up, and then when you flip over into the chart, as we're looking at this off of the daily, this is the way that I'm looking to set this up. Obviously, a good day today, up about 2%. But if you follow the analysis that I provide in these free videos, you are probably familiar with the squeeze. So again, as I scan through stocks and I look for technical setups, this is one that I am almost always referencing. So we have this 2-day squeeze in play, but then we have a few other factors that I like. We have a proximity to earnings, and rather than just say, maybe there could be some anticipation up ahead of the report, I like being able to give this a statistical edge, or to look back at this, and this is provided by my good friends over at the CML Labs and Trade Machine. But I really like being able to look at this and say, over the course of the past 2 years, when we're looking at Honeywell, we can see that there's a strategy that has had no losing instances. Now, it has to fit a certain technical requirement, right? I'm thinking it could be directional because of the squeeze, but if you wanted to curb that directional opinion just a touch, you could look at a strategy that picks up the Delta 50 options in a slightly further dated series and then sells something like a Delta 30 against it. You're creating a diagonal into the earnings report, which gives you a couple of ways to make money. If it trades sideways, you can benefit from the decay of the contract you sold. If it moves higher, the deeper delta of the option that you bought will help make the spread for you as it moves higher. If you prefer the more directional approach, the outright calls could be a good trade as well. And then I want to show you one last interesting relationship here, because if you start working this idea on Thursday and then you have some type of a pullback on Monday or Tuesday, I would say that is all pretty normal as long as you hold the 21 EMA. And I say normal because in any move, I want to acknowledge the retracement inside of it. And you'll notice how from swing high to swing low, we are just below the 618 retracement of that move. The interesting confluence comes where if we can clear this level, I believe we head up into the 1272 extension, and I really like the idea of a psychological target at 200 and then 202 half if we can get it. So anyway, kind of a roundabout way of getting to a trade idea, but I felt kind of having that fundamental backing, a technical setup, and some anticipation ahead of their earnings report may be a spot that we can pull, 30-40% out of this option spread as we get into earnings. So I hope you find these videos helpful. Have a great rest of your evening, and we'll see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.